In this exercise, we're taking a look at the various journal entries that are necessary for the payroll side of things for both the employee withholdings and the employer's share of the tax. So let's take a look at this situation. Genco's first weekly pay period ends March 8th, 2019. The payroll records as of that day show that the employees earned $52,000. The employees are subject to FICA tax withholdings of 6.2% for Social Security and 1.45% for Medicare. So that's an important thing to note, that FICA, when we use that term, Federal Insurance Contributions Act, that covers both Social Security and Medicare. In addition, they're subject to $13,000 of federal tax, $1,560 of state tax withholdings, and they had $1,160 voluntarily withheld for medical insurance and $138 for union dues. Now, in addition to the employee withholdings, the employer, the company, is also subject to a federal unemployment tax of 1.2%. The state unemployment tax rate is 3.4%. The unemployment tax is limited to the first $7,000 of annual salary for each employee in the pay period, but in this situation, no employee has yet earned more than that in this first pay period. So what I want to mention here is that with the FICA taxes, the Social Security and Medicare, the company is going to withhold that 6.2% and 1.45% from the employee's paycheck, and they're going to pass it on to the government, but they also have to kick in the same amount themselves. So the government is actually getting 12.4% for Social Security and 2.9% for Medicare, 2.90%. And but they're going to be done in separate journal entries. So just keep that in mind here as we go through this. The unemployment tax is an employer-only tax. So you're not going to see that come out of the employee's paycheck. So we have two requirements here. Prepare the journal entry for the salary and employee withholdings, and prepare the journal entry to report the employer share of the taxes. Now this template I've set up, it actually, when you pull the list down, you'll see various items, account names that you can use. And then when you type it in over here, it'll be formatted for the dollar amount. Now notice I put several lines in for both the debits and credits. We may not need them all, but I wanted to make sure there are at least enough for what we are doing in both of these journal entries. So the first thing we need to take a look at is the salaries expense. So we're going to have salaries expense of the full amount of $52,000. That's the full amount of salaries expense, but the employer is not going to give all of that to the employee. Instead, a lot of it goes to the government. So we can do the salaries payable. This is the amount, this is the net pay. So salaries expense is gross pay. Salaries payable is net pay. And we'll have to figure out what's left after accounting for all of these withholdings. So I'm going to put this in as a placeholder, but we're going to have to figure out what is left over after all of the other taxes. From an employee or from an employer's perspective for this first journal entry, there's only going to be the one debit to salaries expense. The rest of them are going to be credits to the various payables showing who they owe money to. So let's start through the list. We have Social Security. This is a payable. It's not an expense. It's not an expense of the company. It's a payable. So Social Security is payable. That's 6.2%. Just the employee's share is all we're reporting here in Part 1. So 6.2% of this $52,000. That should actually go down here. The next one is Medicare payable. And that is 1.45%. And then if we go back up, that was Medicare tax payable. If we go down, we have federal tax payable. This is just the income tax. Again, it's a payable. and it's just an amount of $13,000. That's not an easy, simple percentage. They have a chart. Anybody that's dealt with payroll in the past, there's a withholdings chart depending on how many dependents you have and a variety of other things. So that's a flat $13,000 in this case. 1560 state tax withholdings. And then we had 1160 for medical insurance. Now this is, again, it's a payable to the insurance company. And the last one was $138 for union dues. The key thing is the only expense in this journal entry is the salaries expense, which again is gross pay. In fact, I'm going to type that out here just so we can see it. The salaries payable is net pay. And in this case, it's a plug figure. It's the $52,000 minus each of these amounts. So I'm just going to do a simple subtraction of several items. And the difference is the $32,008. And if you add up all of your credits, you get the $52,000, which matches your gross pay. So that's as simple as these journal entries are for this part 1. The key thing is the only debit you have is salaries expense, gross pay, which is usually given to you. The other items that you're crediting are all generally payables of some sort. Payable to the employee, payable to the various government agencies, payable to health insurance, union, wherever. And usually you're going to back in, unless they give it to you in the problem, you're going to back into this net pay by taking the gross pay or salaries expense, subtracting out all of the various payables, and the rest is what goes to the employee themselves. So keep that in mind. The other thing I wanted to mention is that the unemployment tax has nothing to do with the employee themselves. It does not come out of their paycheck, so that's going to be only on the employer side of the taxes. Now, with this one, it's a different story because these are basically payroll taxes. You don't have a salary tax anymore. Instead, you're going to have the Social Security tax expense, and you're going to have the Medicare tax expense, because these are expenses of your share, the employer's share, not the employee's share. So we have these expenses, and then we have the unemployment tax expense as well. So 1.2% for federal unemployment tax. Again, it's an expense. There's also a state unemployment tax. We'll grab that. So let's go ahead and do this. In fact, the Social Security tax expense, remember, it's an equal share, at least in the current years. It's an equal share between what the employee had withheld and what the employer now has. So in this case, you can just go back up here to your earlier journal entry and pull the same amount. Or you can recalculate it. Still 6.5% of F14, which was your gross pay. So let's just recalculate it. I don't want to confuse anything out of it. $33.80, it's the same amount though. Medicare tax was 1.45% of gross pay. So keep in mind, this is not the exact same item from here, because this payable is the employee's share, the worker. This expense down here is the employer's share, the company. Now, the unemployment taxes are only from the company, so you're not going to find anything anywhere else. And it is, what do we say, 1.2% for federal, or 0.012 if you will, times the gross pay. And then we have 3.4% for the state. Now, I do want to make a very clear point here. We have $52,000 in salaries expense or gross pay for all of our employees. They don't tell us exactly how many employees we have, but this $7,000 of annual salary is for each employee. So we said here that no employee has earned more than that in the first pay period. So this is 7,000 times X number of employees that could make up this 52,000. That's why we're multiplying the full 52,000 by these percentages. I just wanted to make that very clear. The other thing here is that we don't have to worry about anything else. These are the only four items that the employee has to pay, or the employer has to pay. And what we're going to do at the same time is we're going to set up payables for these items also. Medicare tax payable, unemployment tax payable, and then the state unemployment tax payable. Now this is just because we are setting up the entry. We're not actually paying it. We're just recording it. We're accruing everything. When we pay it, if we had a Part 3 down here for the actual payment, there would be a debit to all of these payables. All the payables from the employee side, all the payables from the employer side, and then one big credit to cash for the entire amount that we're paying all the government agencies, all the insurance companies, whoever. Generally, when you see these textbook problems, they just go through these two entries and don't worry so much about the payment itself. But I just wanted to make that clear. So the other thing I will tell you is, generally speaking, these problems are going to give you the percentages. 6.2% has been Social Security's percentage for quite a while, and 1.45% for Medicare. There were a couple of years a ways back where there was a 2% reduction in Social Security just temporarily, but it's now back to 6.2%. Basically what I'm trying to tell you is, don't worry about memorizing these percentages. Every textbook problem I've ever seen has given you the percentages. They don't expect you to memorize it. So keep that in mind. But hopefully this has helped to clarify the journal entries necessary for payroll. I thank you for your time.